Good morning, good afternoon, good evening. Greetings to everyone. This is Ignator Forex presenting to you from where we left from the previous video. Today we are going to present about candle patterns. So today we'll be talking about these things about candle patterns, teaching you how to do it and how to make it in Forex trading. So today I'll be teaching you I'll be teaching you about candlestick patterns. Thank you so much for your time. I'll take it short and I'll try to make it something that you understand and something that will make you benefit something. So thank you so much with your time. Allow me to start it. So this is our topic. So in the candlestick patterns, we have what we call the engulfing bar. The engulfing bar. So we have two types of engulfings. We have the bearish engulfing and also the bullish. Remember, last time when we were talking, uh, we once talked about bearish, meaning that bearish it will be what? It will be selling, moving down. So here we have the bearish candlestick. As you can see, this one is the bearish candlestick. That's our bearish candlestick. So okay, today let me find a drawing pane. So this is our bearish candlestick. As you can see, this is our bearish candlestick. So what we do, we talk when we talk about the bearish engulfing bar, we'll be talking about this bearish candle bar being larger, and will be covering the previous smaller body, this previous bar, and you can see the previous bar must be a different or the opposite of bearish, which is a bullish. This one is a bullish candlestick and is covered, the whole body of the bullish is covered by the bearish candlestick. So we'll be talking that this candlestick if bulls if engulfed the smaller body or the smaller candlestick. So that's what we say engulfing. So engulfing, the meaning of the word engulfing is like uh, eating or covering. So this black candlestick is covering or is eating the whole body of the first candlestick. And the first candlestick, as you know, it's a bullish candlestick that has been engulfed by the bearish candlestick. So that's why the name is being given as the bearish candlestick. Thank you so much. So we got another type, which is a bullish. So bearish candlestick, where is it seen? A bullish candlestick is seen. How does it also it works in determining the movement, the trend of the market. We use it in the movement and in the trend to determine the movement and the trend of the market. When the market was moving upwards like this, we are seeing that the market is on the uptrend. So in order for us to sell, in order for us to see the trend of the market, what is going to happen after the movement, after the uptrend, what will happen in order for us to enter into the market? We see it, or it is determined by this red circle, this red rectangle. It shows us that there is a bearish candlestick. The smaller candlestick has been engulfed by the bigger bearish candlestick. So after seeing that, we now know that the market is now moving down. Thank you so much. So that's the importance of this candlestick called the bar called bearish engulfing bar. It helps us to determine the trend and help us also to enter into the market. If you know this, you can enter market well. Remember, I'm saying in the uptrend, that's where you can use it. This is in the uptrend, and you can see that the market is now reversing. The market is now changing direction because you have seen this red box. Yes. So we continue moving. This was the bearish. Then now we go the bearish. Now we go to bullish. The bullish candlestick same applies. The initial candlestick was the black one, which is the bullish, the bearish candlestick, and this one is the bullish candlestick. So we see that um, this colorless candlestick is engulfing, is eating, is or is covering this small candlestick. So that's why we are talking about the bullish engulfing bar. So this whole part is called the bullish candle, the bullish bar, because the last candle is engulfing or is taking the whole part or is the covering the whole part of the initial candlestick. Are we together? So this one, it helps us also to determine that the buyers are now dominating in the market. The buyers are now taking part in the market, are now controlling the market. And this one is usually seen when the market was moving down. Like for example, if the market was moving down like this, we are likely to see this bullish uh, engulfing buy here. So when we see it, we must know that the market is now moving reversal or is now changing direction, is now moving like this. And initial, remember, the market was going down like this. So this candlestick is seen here. So we now know that the market is now reversing or the market is now changing. Even though these are not the only thing that can help us to determine the movement or the direction of the market, but it's important to take note and to move and to also to work with these ones because candlesticks are important and they help us also in the determining of the movement and the trend of the market. So this one was the bullish engulfing bar. So remember, we are talking about patterns, the patterns of the what? The patterns of the market, of the candlesticks. Remember, we're learning about the candlestick in this chapter using candlestick trading Bible. So as I was talking about, you can see that the market now here was moving down, and because of this bullish engulfing bar, this one, bullish engulfing bar is being seen by two candlesticks. The initial candlestick being covered by a big candle that comes after it, like this one is covering. So see, this one is smaller than this one. So we are now knowing that the smaller one was covered. The whole body of this initial was covered by the coming candlestick. And the candlesticks are in of opposite. The first one is the what is the bearish, and the second one is the bullish candlestick. So the market was moving down, but because of this one, we are now seeing that the market is now changing. The market is now reversing. So because of that, the market is now buying. There are more buyers in the market. So you can enter your trade here and you move and you with a buy, you buy here, you buy and you ride up to this level because you have seen this uh, candlestick, and it is only important, and it is important when you see this when the market was moving down and you see that the market is now reversing or the market is now changing the direction. So this is the bullish engulfing bar. Thank you so much for listening. Let's continue moving. We go again to another one. This one is called the Dodge, um, the Dodge candlestick pattern. So Dodge stick candle pattern is now seen here when the opening and the closing price is on the same. There's no change. You can see the price is opened on this level and is now closing also on the same level. So it is called the Dodge, but it is this place. Remember, this one is the tail, and the tail, but it tells that the market that there is no decision between the buyers and the sellers. They were fighting. The market, the price is once moved up and also it once moved down, and also it came to the initial, the opening price. So we know that it have closed on the same price. So this one is also important. it helps us also to determine the market. If it occurs in uptrend, this one mostly occurs in uptrend and also in the downtrend. It helps us also, but it shows that the market is reversing. Also, it's important to take note of this Doge candlestick because it shows us that the market is now reversing. Look, the market was going up. It was going up. The market and traders enters, and here you can see it's the candlestick. The market once moved up. The market once moved up and also it once moved down. But later on, it came to the initial price. It came to the initial price. So this one helps us to see that the market is also reversing. You can see it here, like this. Take note, it's important. The candlesticks are important. So if you see it here, like a cross, it's like a cross. You see, if you see the cross here when the market was going up, it now moved down. You must know that the market starts to reverse. Market is now reversing. Okay, so after this, we go on to another one. On the same note, if you see this in the downtrend, if you see this, let me find somewhere to write here. Yeah. If you also see it in the downtrend, the Doge candlestick, if you see it in the downtrend, it means that the market is also changing direction. Look, the market was moving like this, and now you see it like this, which means the market is changing the direction, is about to change the direction. So if you take note that now so far we have just learned two types of candlesticks. So if you take them and combine them and look in your market and get into the market, it can help you to get some profit. But these are not the only factors, but there are some of the factors that can help you to determine the movement and to help you also to enter correctly in the market. Because if you use just one thing to enter in the market might be biased and you will lose the whole amount of money. So these are some of the factors that you will use to enter or to enter or to place a trade in the market so that you make profit. So take note, and it's important for you to take note of these things because they are important in next chapter. I'll teach you everything so that you get to know. Remember to watch the previous video before you watch this one. There's a previous video that is I have already uploaded that also help you the beginning of it. Now we are on the page number. We are now on the page number 23. We are moving. So here we are talking on this one. We have the dragonfly. I think you can get it. The dragonfly Doge pattern. This dragonfly, you can see it is something like a pin bar. Sometimes it's called a pin bar, and you can see it. It's a bullish candlestick, which means it was the market was it opened here and it closed here, but it was once pushed down. You know, when something is pushed down like this, which it was a black. Sorry, it was black. So it once moved like this, and later on, buyers dominate, and it moved here and went back to the opening price. So this is the opening price and also the closing price. So this one is also important. We call it a pin bar. Okay, you see it, a dragonfly Doge. This one, when you see it in the downtrend, mostly it's seen in the downtrend. When the market is moving down like this, you see it here on a position like this, meaning that the market is bouncing back. The market bounces back here and it moves up. it moves up like this. Market moves up. So this one is important also. It helps us to see the movement of the market. You see what I'm talking about? The market was going down, and because of this one, the market started to change direction. As you can see here, the market is now changing the direction, it's now moving up. So it's important also to take note of this so that you become a profitable trader. Okay, so we go again to another one called the gravestone doji. So this one is a bearish. When you see it, this is the opposite of the initial that we have seen. So previously you are getting to know that the market is now bouncing back. If you mostly see it like here, and the market, it appears here and it goes down. The market was moving up. The market was moving in an up direction, uptrend. Then you see, and it appears on the top, meaning that the market is now taking out a reversal or is changing the direction. This is the bearish candlestick. So it's also important. Then we go to another one, which is this one. So this is the pattern we're being illustrated here. The market is moving up to this level and it starts to move down in this level. Because of what? Of this one. The tail, take note that all the doji candlesticks, they have a long tail and a small body, very, very small, something like just a line, mostly. Then you know that if the body is bigger, sometimes we say the body is three times bigger than the body. The tail is three times than the body to all the doji candlesticks. It might be gravestone or the bullish, whatever. Okay. So it helps us also to determine, to see the movement, the direction of the market. We go to the morning star. This is important. Take note of this. The morning star is seen because of three candlesticks. The first candlestick is the bearish, and the second one is also the bearish, or sometimes you may find it as the bullish, but it will be very small, telling us that the market, there was a less activity in the market. That's why the candlestick is very small, according to the previous lesson that I once taught you. So when you see this in this one, you see that, and you see this one appearing, the bullish candlestick appearing at last, you see that, and it will be covering. Mostly, these two candlesticks, or the first one is being covered, and the second one is also covered. It means that it's a morning star. From the name morning, which means the sun is rising. So when you see the sun is rising, which means it was once dark. So when the sun is rising, which means it's going up, isn't it? So when the sun is going up, which means that at the morning star, when you see the morning star, the market is now moving up. It's now in the control or in the hands of what? Of the buyers. So here you'll be finding your what? Your morning star. And after the morning star, traders, buyers dominate in the market. So that's the importance of what? Of this morning star. Remember, take note that the morning star is being seen when you see three candlesticks. The first two candlesticks will be of what? The first two candlesticks will be a bearish, and the last candlestick will be covering the two first candlesticks, which is a bullish candlestick that is covering all those two things. So it tells us that the market is taking another trend, it's moving up. So this one is mostly seen in the bottom of the trend. Then we go to another last. So this one is being illustrated here. You can see mostly sometimes it becomes a bullish, but it will be very small. You see, the market was moving down, but because of the morning, from the way the morning, we are taking it up. So that's it. After that, we go to the evening star. Evening star, take note that is the different, is the opposite. We also see two candlesticks, but you can see here the first candlestick is the bullish. Mostly also sometimes This one also will be the bullish candlestick, or sometimes a small bearish candlestick. As you can see in the other one that is following will be another a bearish candlestick. It tells us that the market is changing, the market is reversing, the market is changing direction. From the word evening, the light is gone, the light is going, the sun is going down, isn't it? The sun will be going down from morning to evening. So you see the candle, this pattern of the candle, the evening star here, then you know that the market is changing the direction, is moving down. Market is moving down, and you look forward for the entry, then you enter your trade and you make profit down the as you go, as you write it down. But take note what I'm saying. I was saying initially that this is not the only thing that will make us to make profit. There are some of the factors that we need to consider before we take only this one. Then we take another one, this one, this one. So here we are seeing it. We are seeing it here. We see the evening star, isn't it? When you see the evening star, it goes down. So take note of these things, that the evening and the morning star, we see we'll be having three candlesticks, and make sure that you see the formation of the candlesticks, and you draw and you start to use your knowledge from what I'm teaching and from what you've read, and you enter into the market. So we are moving, we are moving, we are moving. We go again to another one. I think I should end by teaching the hammer pin bar. The hammer pin bar, as you can see, the tail is longer than the body. And the body, you can see it here. This one is also similar, or have similar properties to the gravestone, or to the yes, to the gravestone. So you must take note that this tail, or the shadow, is three times, is three is three times bigger to what, to the body. This is the body. So that's what how we see that this is a hammer pin bar, because it's important when you see your chart, to note and to label your candles, so that you can determine and you can work with them properly. When you don't know the types of the candlestick that you have on your chart, it will be hard for you to determine the market. So that's why I'm teaching you the types of the patterns and the types of candlesticks that we have in the market. So this one is called the pin bar, which have the tail which is three times bigger than the body, sometimes more than three times. So it's important when you see this one, you will mostly see this one in the downtrend. When you see this one in the downtrend, which means also the market is changing direction. The market is changing. The market is changing direction. From going down, it's now going up. As you can see here, what I've explained before, the market is going down, and now because of that it's going up. So it's important to take note and to know the types. The board will be small and the shadow or the trail will be longer than that. Okay. So today we want to end here on the shooting star. Shooting star is the opposite of the what? Of the hammer bar. So you can see also the tail or the shadow is three times longer than the body. So this is our tail. You can see it's longer than what? Our body. So because of that, it's called a shooting star. And this one is seen in the uptrend on the top. When you see this in the uptrend on the top, which means the market is also changing direction, is reversing. Market is reversing. Today I'm just teaching about the patterns patterns, candlestick patterns. So the market is changing direction because of that. Then this one you can see that it's a bullish, it's a bullish candle pin bar. That the previous was the bearish candle bar, was the bullish. This one is bearish. So the market is changing direction, is going the opposite one. You look here, you can see it. This is the shooting star. The market was going up because of the shooting star. The market started to change direction and it's now going down. Yes. So far, so good. So today we are going to end here on our topic on page number 39. Thank you so much for listening. Don't forget to subscribe to our channel so that I'll be motivated, and I expect to hear your comments from the teaching so that I'll keep on teaching and telling you more about Forex trading. To become the best, you need the knowledge and you need to read more and to listen attentively. Ask any question in the comment section and I'll also help you. So don't forget to subscribe and wait for the upcoming another video that I'll upload very soon. Shire. Thank you. God bless you. I log out.